Hey, welcome back to the money question. Today, we're tackling one of the most important yet misunderstood stocks in the entire tech sector, ASML. You've probably heard it mentioned when people talk about semiconductors, AI chips, or cutting-edge tech. But what's really going on with this stock? Why did ASML's shares suddenly slide after what looked like a great quarter? What's the bigger picture here? And most importantly, what should you expect next? Stick around, because this one's not just about a single company, it's about the future of technology as we know it. So why has the stock moved down? The drop in ASML stock, which was as much as 8 to 11% in a single trading session, was not due to missed earnings. In fact, ASML beat expectations across multiple metrics. For Q2 2025, the company posted net sales of approximately 7.7 billion euros, a gross margin of 53.7%, and a net income of 2.29 billion euros. Orders booked came in at 5.5 billion euros, which was better than feared given prior uncertainty. However, the issue wasn't in the numbers, it was in the guidance. ASML executives, including CEO Christophe Fouquet and CFO Roger Dawson, issued a cautious note regarding the future. They stated that visibility into 2026 remains very low, and they are unable to confirm growth for that year. This kind of conservative language is rare for ASML, which historically has had good clarity on demand, so it spooked investors. One of the main concerns is the adoption and ramp-up of high-NA EUV systems, which are ASML's next-generation lithography machines. These tools are significantly more expensive and more powerful than existing EUV systems, and are crucial for future chip production at 3 nanometers and beyond. However, uptake has been slower than expected. Only 3 high-NA systems are expected to ship in 2026, compared to 5 in 2025. Clients like Intel, Samsung, and TSMC are all being cautious. Some are facing their own financial constraints or are waiting for more proven performance benchmarks before scaling up investment. This has a material effect on ASML's growth trajectory because these machines represent a big portion of future revenue expectations. In addition to customer delays, ASML is facing growing geopolitical pressure. The United States government is currently considering tariffs of up to 30% on EU-manufactured goods, including technology hardware, under Section 232. This could take effect as early as August 2025 and would directly impact ASML's pricing competitiveness in the U.S. market. Furthermore, existing export restrictions to China are becoming more strict. The Dutch government, under pressure from the U.S., has already restricted ASML from shipping its most advanced EUV machines to Chinese customers. Now even some deep UV systems are subject to controls. This is significant because China accounted for a large share of ASML's revenue in 2023 and 2024, and the company can no longer rely on that market to support growth in 2026 and beyond. Another development that investors didn't like was the announcement that ASML will stop reporting order intake on a quarterly basis starting in 2026. Management claims that short-term order numbers are becoming less indicative of long-term demand and can cause unnecessary volatility. However, investors see this as a reduction in transparency at a time when visibility is already poor, adding to the discomfort. Without regular order data, analysts will have a harder time forecasting revenue and earnings, which could introduce more risk into the stock. Despite these headwinds, there are still reasons to be optimistic about ASML in the long term. The semiconductor industry is cyclical, and demand tends to rebound sharply after a downturn. ASML is also at the center of megatrends like artificial intelligence, high-performance computing, and edge devices, all of which require increasingly advanced chips. Even with the slower adoption of high-NA EUV, existing EUV systems remain critical for producing 5 nanometers and 3 nanometers chips that power smartphones, data centers, and AI accelerators. Over the long run, ASML's backlog remains strong, and its technological lead is unmatched. No competitor is even close to producing EUV systems, let alone high-NA models. That gives ASML pricing power and strategic importance that is hard to replicate. In terms of valuation, ASML stock was trading at a high forward P/E ratio in early 2025, reflecting high investor expectations. Now that those expectations have been tempered by cautious guidance and macro uncertainty, the stock has come down to more reasonable levels. Some analysts view this as a healthy reset, allowing long-term investors a better entry point. Others worry that if 2026 turns out to be flat or negative, it could take several quarters before the market re-rates the stock more positively. In conclusion, ASML's recent stock decline is less about current performance and more about uncertainty in the medium term. Concerns around high-NA adoption, export restrictions, tariffs, and reduced guidance transparency are weighing heavily on investor sentiment. But at the core, ASML remains one of the most strategically important technology companies in the world. For investors with a multi-year time horizon, the current dip could represent an opportunity, provided they're willing to accept short-term volatility. As always, the stock will likely continue to be sensitive to macro events, customer roadmaps, and policy changes, especially those involving China and the US. Currently, I'm holding my shares in ASML, and I'm not planning to sell them anytime soon. ASML is a company of its own kind, and the growth is still there. Thanks for watching The Money Question. If you found this breakdown useful, make sure to hit that like button and subscribe so you don't miss future deep dives. We'll be keeping a close eye on ASML and the entire chip sector, because when you follow the money, you start asking the right questions. See you in the next one.